go, guys. Hello, everybody. Welcome to the stream. Welcome to, of course, the stock market close, the hour of power, as many people call it. And we've got a reversal in the markets today. We have a reversal of thought processes coming in here. We have Nasdaq going long again and S&P 500 finding some weakness. How's everyone going out there? Which is your favorite stock today in the markets? Let us know right now. Let me see your favorite stocks. People seem to like something called DWAC. Then we've also got, of course, Tesla with 894. So after the earnings, it's kind of like a repeat of previous, a repeat of the previous times. We effectively have a very, very interesting point in the markets where we open lower. So we open at that point where we closed, and then we see that retail boom after everyone's talked about the earnings and everyone feels great about it. Isn't that crazy? It always seems to happen this way. People say I'm not going to like this DWAC. It's probably because it's got 2 days of data or something. Knowing you guys, I'm sure it has 2 days of data, maybe 3, maybe less. So we have a few here. People like Take Two. Absolutely. That is, man, I want to look at Take Two just quickly here. This is one we picked up a week or two ago. And yeah, still going towards that 190, that 187. Fantastic level here that's just continued on. Very, very nice. Obviously consolidated there for a little while and then broke out again. You know, the cool thing about Take Two is if it really went crazy, let's say if it went really, really, really crazy, in some ways you could probably extrapolate out like that and say, okay, we're going for all the way into these highs, this $200 plus. Take Two's got some serious ramp in it if it can get it done. And I think the technicals look incredible on that. So yeah, good luck. People are saying Piton. Let's have a look at Piton. We haven't really watched this stock for a while. Came back down to 81. Yeah, that's a good day for Piton. So it's done a lightning bolt actually here. So we have the trough. We have obviously the peak, consolidation into the higher trough, and then we've got that big breakout that's just occurred. Might take a bit of a breather, I think, in the previous session based on this. It has completed, I guess, the same length distance in one day with that big gap out, but this is a significant close to Piton. So if you like this stock, this is the type of ramp close that you do prefer because it is coming off the base of $80. It is showing the initial strength. And that's good news. Let's have a look at the weekly to see if we get any nice movements. Yeah, not too bad. We'll go through the indices in just a second, guys. I know that they're coming into the close here relatively bullish, but I do want to look at that. And now let's look at DWAC. And if it has 2 days of data, I don't care. All right, I don't care. It's a SPAC. Look, well done if you're in it. Awesome. Yes, you know that I'm not like, I mean, they're different. They're great from the perspective of if you found them fundamentally, and I do not hate on fundamentals. Don't get me wrong. Like if you found this fundamentally, or you like the company, or you like whatever this is, because obviously it's a SPAC. I don't know what it is. It's done incredibly well on open, 45.72. In terms of figuring out where you're going to take technical take profit, I mean, is it going to be like a $50? Is this a standard kind of IPO type of thing where it goes like this and then does this, like most other SPACs did in the past? We have no idea. That's for you to really figure out. I mean, in general, I think that when they come out like a bull out of the gates, they might have a couple of days of ramp, maybe only 24 hours. But we do know one thing in American stocks is that IPOs, if you're in early, you can make lots of money. If you're in late, you get stuffed. And that's pretty traditional for the first 12 to 18 months. There's very few stocks that come in, especially if this is tech, that come in and then hold up really, really well. Very, very rare. It's a Trump SPAC. Oh, God. Does that mean it's somehow political? I'm going to get it off the screen, guys. I don't want to be political. There we go. So cool if you hit $50. Cool if you made money. And as you know, we stick it to the finances here. So I have no idea what's going on with it, but obviously the hype was real. And yeah, be careful out there. Don't necessarily think it's amazing. You might want to do your own numbers on it just to make sure that you're well aware of the profits that that company can make long term. Remember, most SPACs, in fact, I would love to know the stat. How many SPACs do you reckon are trading still at all-time highs or near all-time highs in comparison to the ones that have gone back down, well back down to maybe being only down 40% or 50% up? It doesn't exist. It's just an idea. Oh my goodness. I think that practicing scaling could be a good concept as we talk about. Thank you, the 400 people that are joining us this morning. So, what have we got going on in this market? It just keeps grinding. It's grinding, grinding, grinding. So, we kind of went with the idea that we might see a little bit of pullback here. And so far, we have put in bull day, bull day, bull day, bull day, bull day, bull day, bull day. So, that is 1, 2, 3, 4, 5, 6, 7. 7 bull days. I'm going to continue with my concept into Friday. Why not? It's 0.24% up. Now, I'm not saying sell your stocks or anything like that. You know, I'm a big fan of this being on to all-time highs. I have been since we got through the flick, which is here, the lightning bolt. And I don't really believe that this is, anyone that thinks that, it's going to hit this high and then blah, blah, blah. I still kind of feel like that's probably the most likely scenario. So bam, bam, like this. Sometimes it V-shapes and just goes like that, full up. And that's why you've got to get in anyway. But in general, you usually get this pullback. Wall Street doesn't they like to screw you around, basically. They like to do this type of play. And you can see it in previous kind of pullbacks. You can see it in previous ones. There's the pullback there after hitting that high. There's the pullback after hitting a new high. It does it when you least expect it for a lot of people. And I think right now, how much extraction can come out of the markets. In most years, you will get more of a considered one. So let's go back into previous history. We won't use this 19 period. Actually, we can use this. So again, comes up, gets close to the high, comes down, gives everybody a second access. So if you're feeling FOMO, if you've missed out, I know most of you guys are pretty big brain. You've managed to pick up the positions that you want in the pullback, or at least a big portion of them. But just remember, if you're feeling the FOMO, there is a significant, and I mean significant chance that this market comes back down, not to the lows. I'm not saying back down here, but that it does a bit of a roll. I don't know exactly when. None of us do. But don't fall into the FOMO, guys. Go into your stocks. Find your opportunities. There's always a new opportunity. And speaking of opportunities, we are coming into the close with some pretty big things in terms of our earnings. We've got Bradley B coming up $2. Did the bears go into hibernation? The bears got poisoned. So what happened was they were down in the river. They were eating the fish. They were feeling good. The salmon were coming in. They were like, num, 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 getting the salmon. And then, unfortunately, there was plastic in the salmon, guys. There was bad things in the salmon. Cyanide. And they're gone now. The bears got killed. The cyanide in the salmon has got them, Bradley B, and they're not coming back anytime soon. John Moore, $5. Can you talk about Binance flash crash? I got screwed. Yeah, so someone sent me this last night for me, obviously quite a few hours ago. What have they done to the... Let me have a quick look here, because this is actually a pretty important point. So, come on. Bitcoin, and then we need to use Binance's data. Now, have they fixed it, and which contract is it on? Oh, my God, what am I doing? Just quickly, I want to know, where is the flash crash? Against what coin is it? Can I see it? This is what I've heard. This is what I got sent about these flashes. It's on Binance Coin itself, or is it on BTC? BTC versus Binance Coin? or BTC versus, yeah, Bitcoin was at 8K. Well, I would say, look, obviously it's a liquidity feed problem. And this is actually fairly standard. And probably a lot of you have only ever seen this first up. Just quickly, we are seeing a small amount. Let's have a quick look here on the 5-minute. I just want to go into these Nasdaq because we are ultimately near the close here. It's a small amount of selling coming through at the end of the day here. US Binance. It's only on Binance US. It's on BTC USD. Ooh, there we go. Thank you very much. Yeah, look, I've had this heaps of times happen to me. Now, this is usually where it plays to, I would say that they're trying to figure out what they're going to do. Now, I've had this happen to me several times over the years with different brokers. It's a liquidity feed problem. It's caused by a problem usually in their feed. And, sadly enough, a lot of the time what happens is they have like 10 to 20 feeds. One of them feeds in the wrong price. That price gets taken. It's kind of like an Excel spreadsheet in some ways. And then it shows that misprice. And I've had this happen to me on Ethereum. Back in 17, Ethereum was, let's say, $420. And I remember, actually, I'll show you guys. Because I remember all these stupid things. And it sucks. But I'll just show you what the actual trade looked like. So you can compliment me on such great TA. All right, let's go back to the storyboard of 2017. Was it here? Yeah, I think it was around here. So I remember like it broke out around this area, and what ended up happening was there was two breakouts. There was one here, and this is, I think, where it stuffed me. So there was a resistance breakout. And what happened was this went to $8. So my liquidity feed went to $8 because obviously I was trading a contract at the time. Now, I was lucky enough to be with a broker at the time that actually fixed it. However, it took them a few days to fix it. So by the time they fixed it, you know what the biggest issue was? It was already at $700. So that sucked, yeah. I'm not sure what Binance is going to do, but I would say they have to fix it. It's actually kind of illegal. You would think. So, yes, that's what's. I would be incredibly surprised if Binance doesn't fix it. But I think that's part of the reason why we've got this weakness coming through in the markets, because a few people would have got liquidated and they'd be freaking out. So they'd be selling positions that aren't leveraged because the leveraged positions probably got liquidated. Supposedly legit. There's no way. Yeah, it was a liquidity problem. There's no way. Not every feed showed it, yeah? So if you go through, I haven't really investigated into it, but there is no way that this is across the board down to 8K. No, BTC wouldn't have hit 8K. It has to be a liquidity feed problem. Conscious Investing says, what a day trade DWAC was. Yeah, it's one of those ones. I'd put that in my little like speculation of speculation account. Craigo says, so many scam wicks on other coins would have smashed people. Yes, but I think, I mean, I can't speak. Has anyone been hit by these kind of wicks recently in the coin markets within reputable brokers or reputable things? This is why it pays to usually pay. Like sometimes people say, oh, I don't like paying $15 brokerage or $10 brokerage for a trade. If you're getting caught up on the brokerage, you're probably doing it wrong. What you really want to be doing is you want to be talking about how safe is my money on this platform? A very important factor especially when you scale up over time. And then also, what's the actual service that you're getting? If you're with a high quality broker, even if there is a liquidity feed problem, which is unfortunate, they are unlikely to punish you for it. Like they will most likely fix the situation. All right, let's talk about this situation right now. So we've got VIX, incredible lows, guys. We've got 15. It was just mentioned there by Andrew T.O. Thank you very much to 600 people coming in here. Big thing down onto this level. We also have a few Evergrande articles came out this morning. Absolutely. So the VIX is down to 15. We've seen it go to 14 before a few times and then bounce off that level. So we're getting into that point where the fear has now ejected the market and it's all green, all good. But I'm going to say one thing. We're slowing down, slowing. So this is the line that I had. Obviously, I started talking about pullbacks, some weakness potentially being found here. We've ground 2 big day or 2 days out, not big days, but days out here on the S&P. We're going to close around the high. And I feel like at this point, we've got so many green days in a row, it's becoming statistically unlikely that it keeps going and without a red day. So over here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. We had a red one in the middle. 1, 2, there's a red one. 1, 2, 3, 4, red one. This is getting pretty damn bullish in terms of statistics. I don't even know how many there are. Let's go with all these green. 1, 2, 3, 4, 5, 6, 7, 8. So this is serious business right now. 1, 2, 3, 4, 5, 6, 7. So however we look at it, we are going to have to expect, even though the bears have been poisoned in the Salmon River, they are most likely going to try to come back. And I would say you pick specific stocks here, but you maybe don't focus on your index here. Because when you're looking at indices, yes, this looks like, a little bit of grinding higher, but I still think that's very, very, very possible. So if you're feeling FOMO, maybe just go back to the past, have a look at the stats, and I think you'll be well aware that you're going to get one red day. Paul Scaglia, sorry. SAR $100. What program are you using for TA? Is it Trading Ticks? Have a flat white on me. Oh, thank you very much. I don't mind flat whites. They're pretty good. Coffee, of course. Thanks, Tom. Love the stream. You're great. Could you look at FTCI entry point now? Question mark. We'll have a look at the technicals on that. Absolutely. From an educational standpoint. TA, no, I'm using TradingView here, Paul. You can click the description and the links down below. And if you ever buy the pro subscription, I get like $3, man. So if you do like it, look, TradingView is probably one of the better platforms. You don't have to trade in TradingView, though, remember. You can do your TA in here, and then you can trade in your professional platform of choice. In fact, I suggest it because it stops fat fingers. And what I mean by fat fingers is those instant bang, I'm going to place that trade. Yes, market order this trash. And then you accidentally get into a trade that you made a mistake on. Let's go through the markets. Let's do a little bit of a rapid fire here. I just wanted to quickly get rid of the FOMO for a few people because the VIX is very low. The US 10-year, it hasn't stopped going up. Still creeping up here. All of a sudden, it might become the story. Remember, it's in plain sight. Wall Street likes to come up with some random excuse. I wouldn't be surprised. We hit a 1.7 on US 10-year. Oh, the Nasdaq fell due to the 10-year. Please. We all know the market's well aware of what it's doing, but this has just become the news story excuse. In regards to the wick, I think that's a little bit bad for Bitcoin sentiment. However, let's hope that Binance and others that have had this wick liquidity issue can come out over the next 24 hours. It'll be a big problem. Believe me, they would be freaking out. Let's go through. Let's look at every stock that we can go through right now. So Tesla, absolute mammoth here. Coming off the earnings, we saw the earnings report. It looked generally pretty good. Obviously, they kind of slightly flattened the guidance, but I think we all can see through that. It's mostly a supply chain partial issue and a ramp partial issue. They have been executing, which is excellent. They're clearly ahead. And you know what? I was watching a YouTube channel of a guy that I never thought would buy a Tesla. And guess what? He makes an announcement. I bought a Tesla, guys, and I love it. And he sold all these other cars. Hey, I mean, I've been in a Tesla. My neighbor has a Tesla. They're replacing all their Porsches with Tesla. It's very bizarre. This is the world. People are loving it, man. People are loving it. So cool. And that's only one part of, obviously, the Tesla story. But look, the bears are getting crushed here today. And I think this is what usually happens. The market comes out, and we've seen it time and time again. The earnings result itself isn't pushing it. It's just the retail crowd reading into it and saying, you know what, I love this. And they're picking it up right after. It's happened, 3-4 times now. Very little. Look at it over here, wherever the hell the earnings is. A little bit down, then bang, straight back up. So this is a significant level. And once we get through 900, we should be able to see some big moves. So we've got here 9 minutes into the close. Square having a fantastic day in terms of movement up. I mean, if you're in it, if you picked in this 220, 230 area, well done to you. I'm still a bit lukewarm on this trade, but overall, it's long leg doji into strength, very similar to the market. Wasn't my pick of choice this time round, but very, very significant. Apple continues to struggle around the 150. We expect that based on, of course, the amount of calls sitting at 150 this week. However, we've still got 7 days. So remember, we kind of expect strength coming out of Apple. And I'm going to give you a stat just so you can use this in the future. And I talked about this in the mentoring I did last night with a few people. Did you know that October, 85% of the time, 85% over 20 years, this is bullish? And it's bullish to a percentage of around 5+% in the October month. That's pretty incredible. Let's now do Paul's question. So he's got FTCI, FTC Solar. Oh, very little data on this one. That is a small issue. We have seen solar pick up. The closure break that you wanted was probably here. You've now created a long leg doji on the close today above the 20 moving average. This is not an easy chart to read. I would probably be more likely, based on this, to look at the fundamentals. Has it based? You would think so. Is there higher volume? Sure. Are you at a resistance and that's why it stopped? Absolutely. If it breaks through here, is that significant? I would probably practice scaling if you like this. But it hasn't gotten through the previous support, which has become resistance, Paul. So I think that's a big part of it. That is a base. That is a closure out of the base. It's not what I would call A-grade TA, but you're never going to get that on something that's relatively new. This is worth $657 million, guys. So not a huge one. It came in IPO. Everyone felt great, had that last rally, and then it did the traditional IPO thing, which is pull back for a while. Amazon, let's take a look at this. Thank you again, Paul. Amazon has, kind of held ground. I still like this for the November play. I've talked about it quite a few times. There's significant opportunity, I believe, in Amazon. Google is doing whatever it's doing. End phase is picking back down to previous resistance becoming support. Could be an opportunity if you're in the smaller time frames to like dial in there over the next session, over the Friday. Microsoft's pretty boring. All the bios, we're going to skip them for now. Actually, let's have a look at the first bio. Yeah, we're going to skip them. SPLK, okay, that's all right. How's the old Chinese stocks going? All at resistance, that's fine. Twilio. So Twilio hits resistance, and it's created a long leg doji yesterday. So we've got long leg doji, long leg doji. Let's see if we can get decision made, because this is still down significantly. So we're still down from the 400 highs. There could be good participation trades above these two long leg dojis into here. So I think that's a significant kind of position that people could be taking. We obviously started getting really bullish on it down here. It's hit the first take profit. It's doing the correct things, which is indecision candles. We get that decision made over the Friday session, or maybe even, probably not today, but over the Friday session, then we could place positions there. NVIDIA's going for a new all-time high, it looks like. It's not really a new entry zone. Pins is floating after the announcement from PayPal. Roku is coming back down to the level of previous resistance, acts as support. So again, opportunity could be here. Probably want to dial in smaller timeframes. Be careful on Roku. It's obviously unhealthy in comparison to other stocks. So you'll need to really put in bit of work around that 330 to make sure you're picking up good stuff. Etsy continues its strength. Let's hope it goes to the 240, 242. DKG still within the range, really good range. We're not letting go of this. We're going to keep watching it to get it out. Airbnb, whatever. Intel up 0.95%. So why is Intel important? Because look at this after the close. So in only a few minutes, we're going to find out whether this stock has done well or poorly. I would like you guys to tell me right now, Intel or Snap. Tell me which one. So Intel, good, or Snap, good. Which one do you think is going to have good earnings and outperform the current market today? Let's see what you think. Joseph DeSalsa says, hey, Tom, $4.99, by the way. Hey, Tom, can you take a look at Take-Two? Made good money on it and scaled at 130. Thoughts? Yeah, I did have a look at that before. We will bring it back up, though. I like it. So Intel is doing the dance. But is the dance going to be well paid off? Oh, it's out, but oh my God. The earnings is terrifying on that one, I feel. We'll have to see what ends up happening, and then we can assess the situation a little bit better. Spotify hits resistance, another one turning over. Netflix, actually a big breakout here, 4.42%. After the earnings, it pulls back to the 20, which is here, here, and here, and then just booms in one day. Surprising. NVAX, that's still in the doldrums after all these bad kind of reports. PLTR, hey, that one's getting close. PLTR is the biggest sleeper thing ever. It sleeps, it has a really big sleep, then it gets a bit of a retail rally. Significant point, guys, $25 coming up soon. Possibly the Friday session, you'll see a closure above there. I wouldn't sleep on the 25. I think 25 into that 27 again could be really real. Now, PayPal, the elephant in the room. This is a little disappointing, but overall could be an opportunity. So PayPal has, we talked about it yesterday. That's 3 bad TAs. So what I mean is the TAs have been solid, but that's 3 bad TAs. When they're purchasing another company, usually the stock that's purchasing will go down. It's actually bashed the support. And unfortunately for a lot of people, this is where the next level is, around 234. It seems inevitable it'll have a crack at that level. I think it'll hold fairly strong. And if you are looking at picking up positions for PayPal and you like the Pinterest thing and you like the company overall, this could be a very interesting zone. So it's pretty unfortunate. I think that the purchase makes some sense, but yeah, I could see it coming back down to the support. What do you guys think? Zoom still boring as Twitter and Tencent. Tencent still, I think, is okay. Now, I know Zillow is coming back here. So Zillow, we theorized, was in recovery. Your stop should have held if you were trading this recovery. I do think that was significant enough for you to take first scale in positions. And we're obviously looking for 100 to get broken against. So this is filling the gap and coming back up here, this Zillow. Earnings in 12 days. So will we get a bit more of a further ramp? It's looking not bad. It's filling that gap. It's got a little bit more to do to really get the full fill going on. So that could be one that people look at. AMD continues towards the high. Nothing changed there. Take-Two, which is Joseph's question. Yes, I actually think there's more in this, Joseph. Take-Two, big consolidation. I'm wondering whether we go the whole distance of the previous move. In fact, this is a significant little consolidation flag here. So that's why I'm thinking it actually might have even more in it, at least to 187 high. So you said that you scaled out at 180. I don't hate the scale out. But yeah, I think you could leave some on from technical perspective to new levels. Net continues to be strong. I still think that's in potential blow off. So be careful here. I love the company. I love it. But yeah, very important. Snap coming into earnings, stuck in a range. No clear loose lips there. AMC, quite unfortunate. Didn't hold the 40. I just feel like this trade's losing all momentum, and it has been for some time. And that's a disappointing closure. Should have continued if it was going to continue. Usually it ramps the next day. So we've just got into the close. I want to go through a couple of others because these were super chats. So we've got BEKE. This is a super chat that came through. Significant closure in the previous session. Significant gains today. Very well done. Fantastic. And we've got, I think it was Scott that came up with this one, Scott Morgan. So this is HCAT. Well done, Scott. Good find. Nice 2% in today's session. Break above. Inverse head and shoulders. Fantastic inverse head and shoulders. We spoke about it yesterday. Well done on HCAT. That is a clap. Give Scott a clap. Well done. It's very, very good. So how'd we go? We basically rallied slightly into the close. So we've got a 45.50 and we've got a US 100 for 15,500. Wow, look at this. It's almost all the way back to the top, and it only took a couple of days. It's just phenomenal how fast these markets move. Randy Manning, $4.99. BMY. Okay, man, we'll do that now. Thank you. Finken79 says Tesla is the iPhone if Apple actually still innovated. Lol. Yeah, Apple does not innovate. I agree with this. I'm surprised in some ways that Apple must have had so much advantage. I mean, I've loved Apple for a while now, but I hate them more each year they don't innovate. You are correct. Regardless of what people say, they have no new products. Their laptop is the same product. Their ecosystem, it's basically just the efficiency improvement of what they already had with Steve Jobs' vision. I haven't seen anything new out of them. And the only thing they've done, the only thing is the AirPods. I don't care about the little stupid tracking device. I'm sure it sells well, but in reality, we need new product, guys. We need innovation, not rhetorician or rhetorician, not just continuously using the iPhone and putting slight improvements in it. BMY is right on support here, Randy. You are trying to pick the bottom of a falling knife, so you've got to really be careful about the structure that you're looking at. And when you're trying to pick these guys, usually 20 moving averages are your best friend. So you won't get the low, or if you do get the low, you're just trying to invest into that. You're looking for it to consolidate here, man, and then hopefully close above $59-ish. And that will be the first step of scaling concepts in the education thought process of these kind of recoveries. Okay, here we go. So we've got the big two earnings. Let's quickly get them out. So we've got Intel and Snap. All right, here we go. And where's my Intel? Intel. So Intel is an abomination earnings, clearly. That's why I do hate earnings. And Snap. So I wonder what happened here. Let's have a look. Let me pull it up. Abomination earnings. Hopefully it recovers. Okay. Intel talks of chip designer. Yeah, that's right. That was fine. Just looking at my feed. I should have it in a second. All right. What did you guys say? What did Blizzard do? Apple really needs to come out with some stuff. Yes. They capitalized on charges. Absolutely. Intel getting pounded. Yeah. So Intel's down 5.62%. 52.90. So let's have a look at this in comparison to the daily here. So 52.90 puts it back basically a week. So all of the recovery that it's done so far gets taken off and it comes back down to support. It's not necessarily the end of the world because you're back down into support, but it does show how you can have a technical breakout and why you really need to be aware of the earnings. You don't want to always just go in, like say you're playing earnings on a stock. One of the ways that maybe some people do it is they buy like a short dated call with, very little dollar risking, but you don't have to deal with this. So you might just say, okay, cool. I bought it. My trade was, of course, here's the risk. And overall, I was always going to take this. You don't want to take more risk than you're wanting to pick on the stock. That's very important because, of course, it's a leverage position, but it can reduce your risk to this. And a lot of people will give it to you for relatively cheap. So, yeah, 6% down here, 52.65. Not great for Intel. Same as Blizzard. Yeah, exactly. It happens with all businesses where basically a business will go through. Oh, I missed one second. Luke, $2. Just wanted to show appreciation for the vids and effort. I appreciate that. So people were going Snap good, Intel bad. Some people were saying Intel good, Snap Snap bad. Interesting. And Big Dipper comes in $5. DWAC, I know you hate SPACs. I do. Normally me too. But a world leader with a SPAC and a following is money. Making day trade opportunity. Love the show. I think probably you mentioned the best important thing, day trading opportunity. I'm not sure about like long-term prospects, I guess. That would be probably what I would say. Long-term prospects. So Intel cuts the, let's have a look here. Intel cuts financial year adjusted EPS forecast and it misses the estimates. According to this guy, Reese Russell on Twitter, says 100% deserved. Worked in 2017. This is obviously for Intel. And it was the most complacent work environment of all time. That is probably true. They got to turn it around. But I do think they're probably putting in the first steps. So if you're an Intel fan person, don't lose faith because it's come back down to here. What you actually want to do is, okay, you say it's down 5.68%. You got to go and read the report. You're going to have to pay attention to it. Now, Intel technically has November seasonality. All right, we've talked about that before. Now, if it technically has November seasonality, it's coming down. While the initial reaction could be negative, we might see some signs of recovery after earnings. That's actually one of my favorite types of trades, where you get the earnings and then after you see the recovery in the stock, you see the signs of good technical analysis, and that takes over rather than just sitting there going, oh crap. You have to risk the fundamentals. You get to actually see the ramp. So we'll keep coming back to it. We'll see how it ends up trading. Markets have closed, but obviously futures are still open. 0.36% close on the US 500, 0.75 on the US 100. Guess AMD will have a good one. Yeah, of course. Let's have a look at AMD aftermarket. Let's see what happened there. AMD just flogging them 1.8%. So, and there we go. Everyone's speculating that AMD has taken more market share, and I think that will be in the corporate space. So I think what you're going to find is when you look at Intel's full report, they're going to be losing corporate, which is a huge deal. They've never lost it in the past. Netflix had a strong close above resistance. It certainly did. Joanne Liel says, Miami Beach luxury real estate. Ooh, sounds fancy. Here's a question for you, Joanne. Do you have a Rolex watch or a Patek? Since you're in real estate, I assume you do. And also in luxury, I assume you do. Tell me what model you have. Yeah, so when Intel reports you invest in AMD. Yeah, well, look, that's been the trend for the last couple of sessions. I still think Intel will turn it around at some point, but it's like any business. They become complacent. They absolutely get belted, and then they have to turn it around. PFE from Conscious Investing. Let's have a look. Pfizer. So Pfizer and all of these stocks have dropped back down. Yeah, that's good support for it. But you won't have these sugar rushes anymore on these stocks. So say like all this hype and anticipation, I doubt that. I mean, I never really believed in it, but yeah, I think that we're just kind of hovering around support here. Slow and steady wins the race. And if you notice the healthcare area, XLV, whoa, there goes Snap. Ooh. That would explain why the price action became weak for it. Oh, 64, down 16%. Will this now be something that people try to snap back on? So $660, 18.79%. Oh, painful. Let me have a look. That is one nasty report. Snap down 23% then, guys. It's like pins all over again. Now, what is that doing to the Nasdaq? Let me have a look at the Nasdaq. I actually think it could pull the Nasdaq slightly. Let's have a look here. Not because it's Snap that's doing it. It's because is this a sign of things to come for a few of these social medias? Oh, 23%, guys. 25. That's why I hate some earnings. Got to have risk adjustment. I hope no one got burnt by this too much. I always try to stay away from it. 25, 26%. Wow. So this is probably going to hurt a little bit of US 100 sentiment and cause that slight pullback. The reason why is because this is probably one of the biggest socials that we've seen so far. When we get into next week's earnings and the week after that's earnings, if this is a sign of things to come, then of course pullbacks will be happening through certain indices. What do you guys think about that? Damn, I'll get the data on it in a second. So Intel stocks obviously down 6%. Snap obviously is getting obliterated. Lunch Money just said just bought Snap at $55. There we go. So there is a Rolex in the room. Hunter Green Submariner. But Apple Watches now are on the trend if you're not super rich. Yeah, it's a good way to kind of get past it, isn't it? Hunter Green. Which one's that? Is that the Kermit or something? I don't know what the hell a Hunter Green is. It's not the Hulk, I guess. Darth Vader says, they upset me with the Spectre, and Meltdown. I'm never buying Intel. Fair enough. Snap bringing Facebook down. Yeah, socials will be down. This is a big deal. Like, I mean, I can see opportunity on a 25% drop. It's one of, and I'll just tell you guys, this is a thing. There's 600 people here. In general, when you see a stock drop this much, so let's say a financial drop 20%, and I want the big brain people out there to think about it. If a coal mine dropped 20%, if a I don't know, material dropped 20%, or a healthcare company dropped 20%, or maybe not healthcare so much, but anyway, you get the idea. All these older industries, what would you probably not want to do? 20%. What do you think the stats are for yours going back up, like your stock going back up? It is bringing down this US 100 in the futures. I'm telling you, people won't. That is the first earnings big miss we've seen here. It's going to hurt sentiment to a degree. I'm not saying it's going to blow the world off, but certainly not looking at good. All right, we've got a few other super chats here. I'll just quickly catch up on. We've got Luke's. Thank you again, Big Dipper. Luke, $2. What do you think of Sentinel-1 chart? We'll check it out in a second. Thank you very much. Let's see what people say about this. Facebook's down 5%. Yeah, we'll certainly look at that. Not buy the dip. Yeah. No, you don't buy the, no, hell no, you do buy the dip. If you buy the dip on these older companies, these more non-technology companies, the stat is against you for recovery. And that's a huge mistake people will make in their lives of investment. In technology, you can almost usually look to buy certain support. So like Snap might be $50 or something. 55 is probably not the worst thing in the world either. But you're doing it from a perspective of generally recoveries do happen. Generally. And there is a chance that a technology company can ramp back up. But with a coal mine, with all these known entities, they don't ramp. The statistics are against you. You've got to wait for basis, guys. I mean, even think about like this Snap aftermarket. I'm sure someone will try to buy it tomorrow, but it's a guess. Complete guess. The dip keeps dipping, says Massey. That's right. So Luke wants Sentinel-1. We'll check that out. For people that are looking for a little bit of a pullback on the Nasdaq, this could be good news for you because Snap just missed. And when they miss, Facebook, as we've heard, go down, etc., etc. Let's take a look at the daily here on Sentinel-1. What do I think of the chart? I think it's just kind of following a really nice, relatively good strength into 72.50. Let's go to the 4 hour. 20 moving average on the 4 hours bounced a few times. That's probably pretty good. A little gnarly on this candle here, not the best candle, but overall fairly strong. You probably draw a bit of a trend line through these bases as well. I think that's fairly relevant to do. And you might even have a top end kind of, not necessarily line, but yeah, that's not very good. Ignore the top end. Waste of time, that one. Yeah. So it's okay. It's not too bad, Luke. Did I talk about pins? Not really. I think with pins, it's going to hover for a bit. This will hurt pins though. Obviously it's got a potential purchase on it, but any social media platform, because of this announcement here from Snap, is going to hurt. So you got pins, you've got Facebook. Look at that, Facebook down 7.39%. Any of these socials will be partially down. Let's have a look at Microsoft for a second. So Microsoft's still holding. Obviously, it's not really going to be that susceptible to it. So they're all blaming the Apple ad situation. But in general, almost all of these social medias will be down after this miss. Let me scroll up here. I've got one other super chat I want to do here. This is for Random Cube Hacker, $5. Soxel, 100% of my IRA currently. My goodness, that scares me. Sir, can you practice some kind of risk management, sir? No, you do whatever you want to do. I'm not going to tell you what to do. This is educational only, and we obviously talk about the technical analysis aspects. So, Soxel. Great base, great level, clearly very well bought at this zone. Great closure, which is probably what you've taken it on. And it seems like if you take the price action and you think about the range and where you expect it to go to, probably looking about that $48. $48 resistance. And because it's happened so often, even the potential of breaking through. This is very nice. Very nice. The recent price action I like a lot. And the good thing as well is you've got the 20 and the 50 acting as dynamic support now, you would expect, because they're ribboning on each other. That's really good. So Snap's all over the place here after earnings. It went down there as low as, let me get the post-market earnings. It won't show, but I think I saw a 52 something on it then. Then we're back to 55. So big movements there in the aftermarket. Let's now go look at the NAS. So the NAS is pulling back. There it is. It's taking off a whole bunch of today's money. Let's go to the NDX so we can understand. So the NDX was actually up 0.66%, 15,489. Maybe we'll have to use the QQQ. So it was up 0.61%. Opened 373. We're now back to 375. So almost all of today's gains on the Nasdaq have been taken off since that Snap announcement, since the Intel announcement. Luke says Snap got clapped. Yep. Darth Vader says Intel are doomed because I decreed it. Yep. Why did Snap die? Well, it'll be earnings based on ads and probably usage. I'll bring up what I've got in the report. 1 second. Snap shares tumble 24% after revenue forecast trails estimates. So another missed on estimates. Probably a good example of, well, as if you're in growth stocks, this is important to know, guys, because I don't want you to be freaked out when this happens in the future. If you're in growth stocks, if you miss one, or hyper growth, if you miss one earnings, even marginally, what is your average crash off that earnings? Can anyone answer in the chat room? So in general, when you miss earnings on a growth or a hyper growth stock, what are you usually going to lose in your stock? Snap stock sinks over 25%. Again, Apple impact warning and the revenue miss. So Twitter has also dived here. Let's have a look at Twitter. Down 7%. Wonder what happened to Apple. Flat. Thought Apple might go up a little bit more. 20%? Yeah, about 15 to 30, says Ryan. 90, says YM. Snap is falling. Snap is holding at this stage. It was lower just before. So 55 down to 53. I think it was 52 in a bit. Yeah, it's about 20, 30%. You guys are correct. You must expect this. If eventually it will happen to all of your favorite growth stocks because they'll miss one. And it wasn't that long ago that I remember it happening to Amazon. You know, if we go back in a history lesson of the Amazons and we think about what actually happened many moons ago, there was a point there where Amazon got, destroyed and everyone was thinking, oh man, it's pretty bad. And you were getting like, fairly significant discounts back in 14. You had these big declines here on Amazon. I mean, when it went from like $400 down to $340 in a few days. Now that's, you just go, oh, well, that was easy to hold through. But these were fairly significant pullbacks, especially this 15 pullback. I remember this 700 down to 470. These were relatively large. And that's the type of thing that can happen to any of these growth companies. If they come out of growth, miss an EPS, something like that, miss an estimate, give bad guidance, they will lose significant coin. I mean, there's a big drop that happened just in 18. Bam. So it went all the way, boom, straight down to 1380. So it can be seen as opportunity. The good news is that obviously that's Snap. That Snap's pulled down all the other socials. So if you like socials, you like a different social, could be an opportunity for you. People really want me to talk about this DWAC. I don't really see the point. I mean, it's up a lot, which is cool. But other than that, it's just a SPAC and another one of a stock that moved. Tesla has held up fairly well. Yeah, Tesla's done amazing. Very, very significant. And if you mean aftermarkets, yes, it's done quite well. So hopefully for a lot of us, this gets this happening. I don't believe it's that significant. It's pretty much showing how powerful Apple is really to companies' revenue earnings. I mean, that's obscene really when you think about it. They're blaming Apple's ad revenue and all these types of stuff. This is Snap, by the way. Or their practices. I mean, one company controls so much of their income. Obviously, if Google did it as well, holy moly. Really, it's two big companies that control such a huge portion. It's kind of scary when you think about it. SPX pullback? I certainly hope so. This NAS is falling here. I mean, we're down to 0.26%. This is bad for confidence, at least initially. When you're really snapping the price right now. It's hitting Facebook, it's hitting socials, it'll start to hit all of the tech side. Should they believe it's more widespread, and it makes earnings season incredibly exciting and dangerous if we continue to see misses. Remember, hits and misses, we'll start to cover it next week in the channel. So if you guys enjoy that type of stuff, we'll start to cover hits and misses. Maybe we'll have our first miss earnings. Silver Liner says, okay. Oh, thanks, Tom. No praise for my DWAC. I don't know what you guys want me to say. I mean, it's up a lot. You mean because you found it silver or you knew it was coming in, you thought it would be good? Well, I'll give you praise for finding a stock or a SPAC that comes up with money. You can have praise. But I hope you have a plan as well. Last earnings, Amazon dropped a lot. Yes. Yes, exactly. And Amazon's earnings are now 7 days away. I'm positive on Amazon over obviously the long term, like a lot of people are. I'm also, but I agree with you. Like Earnings is a risk to a trader, especially someone with tight stop losses, because guess what? Unfortunately, when the market closes and the damn earnings come out, or the market opens and the earnings have already come out, you can get gapped on. So a trader generally, there's a reason why I love buy the rumor, sell the fact, or I love buy the rumor with great price action into the earnings event, or any of those types of strategies, because you don't have to hold it for the earnings. And that reduces your risk. An investor doesn't care, because an investor will hold it through. They won't have stop losses because they're buying the stocks that they want. That's the cool thing about it. Isaac Story says it's number 2 on stock twits. Praise them for checking your website. Chris Weatherly, $4.99. Your wisdom made me a couple of bucks today, Tom. Cheers. No worries, Chris. That's good, man. New for Life says, does it matter if they lower the expectation from previous earnings, aka Amazon has a lower expectation now? No, because the price has allocated for that. There's always optimism. So the price, that basically this price right now, it's being optimistic that they will still beat the new estimate. But when they lower an estimate, the stock will take it out. Snap is less than 2% of ad revenue, will not impact Facebook or Google. No, it's not going to impact them. I'm just saying it's crazy how much impact an app has, like, or like one or two companies have on an app. That's correct. Stock Pirate News. Jay Nibble says Amazon has the best opportunity for not being impacted by decreased ad tracking. They can monitor ROI of ads without cookies that other advertisers rely on because they own the site you are on. Yes. $60K retest on Bitcoin. Oh, that'd be cool. Maybe. It's quite far away from the daily 20. Daily 20 would be pretty sweet. This whole spiky business that happened in the markets, I hope that gets fixed, by the way, if anyone got attacked by that. That sucks. That really sucks. I give you my compassion for anyone that got hit by the spike. It's the worst feeling. I should know it's happened to me several times. But I will show you, because not many people know this. I will show you the story of someone trading a pegged currency and not knowing about it. Now, this is not my story, but I think you need to be aware of these types of things are not new. However, I think one of them is fake price and one is when the central bank takes away a floor. So for anyone that doesn't know, back in the day, there was a Euro Swiss floor. So let's go back to 2015 in story time here just at the end. Thank you as well, the 626 people joining us. And what happened here was basically we had a floor of 1.2. The central bank, Swiss franc, they were like, you know what, we're going to hold 1.2. And it was also back then positive swap, which basically meant that you would be able to hold the position long and get paid every day you hold it, effectively an interest rate. Now, it was costing them a fortune. The price action was showing weakness. You guys can see this. It was putting in a series of weakness points into this level. Now, unfortunately, I know a few people that got burnt by this. And then all of a sudden one day they said, we're taking away the floor. They couldn't tell anyone because it would have put a run on them. They were losing billions a day. And they took the floor away and look what happened. From 1.2 down to 0.96. This is a currency. And I can tell you it was worse than that. The real print was more down like 50 cents. So the real print on the day has been adjusted here. I can tell you it's been adjusted. I guarantee it's been adjusted because I remember what happened. The liquidity was so bad underneath that level that it went in 5 minutes from 1.2 down to 0.5. That is insane. That's a currency of a country. Then it rebounded. But my point is that is what happened. It went insane. Anyone that was there would know it was down through the floor, off the screen, onto the other screen. You got to be able to expect anything. And remember, Wall Street's biggest thing that they look for is how can I risk adjust? And of course, this Snap earnings is a good example, or any of these hypergrowth earnings are. Maybe you want to use risk adjustment techniques, possibly options, so that you know your worst case, all these types of things. Speak on the QQQ? Yeah, we're just going over to it, David. So I think that this will pull down sentiment here, at least initially. I really hope we get what we want, which is this. I would like it to go to my red box. About 15.1 would be fantastic. I've now spent 2 days warbling about how I think there could be a little bit of a, I wouldn't call it a correction, let's call it a pullback in overall bull trend. And this ad revenue misses could be the kind of small catalyst that pulls it back down. We also have the US 10-year, remember, at a 1.689. So between both of them, I would like to see it back down here and then move long. I'm not thinking it's going all the way back down here and everyone's going to, cry and it's all going back. That's unlikely at this stage, but we are in earnings. And now the story will be super important. You better watch these closed streams. You better watch the earnings next week, because when we get into the earnings next week, we've got big kahunas starting to come in. And especially when we get into the Apple, the Amazons, we're not that far away from some of these. Let's quickly just talk about them. Let's go here. So we've got Amazon 7 days away. We've got Apple 7 days away. We've got Microsoft 5 days away. Now, these are the kahunas that are going to move it. Google 5 days away. Wow. Look at that post market on Google, 2.58%. Apple doesn't care because it's like, well, we screwed everybody, so it's all good. Look, actually, Google's, this is cool value that it's coming down here. Isn't the Evergrande default thing today? Absolutely. All of these catalysts together, which I'll talk about in the video, are good excuses after so many days of green. Because remember, we've got 1, 2, 3, 4, 5, 6, 7. Statistically unlikely not to get a pullback day. Incredibly statistically unlikely. And a lot of you will say, well, but Tom, you said it here. Well, yeah, I did. And I'll stick to it. I don't care if it's going up 0.3. So many catalysts, lol. There's always a lot of catalysts in the bears. But I still think the bears got cyanided. The salmon was poisonous, guys. Remember that. Big techs are affected by Snap earnings, 1 second, because of the Apple privacy causing negative impacts on ads. Absolutely. Finkin79 says, I remember a BTC glitch that almost made him leave the stream. If you're talking about me, yeah, that day that I almost needed to go and invest. I remember that one when I saw, it wasn't BTC. I don't think it was BTC. Oh, wait. No, I know what you're talking about. The Ethereum one. Yes. Anyone's been watching the stream for a while. Oh, the Ethereum one. Oh my God. I was frothing. I remember that. The fake price. Yeah. So what happened, guys, was Ethereum was trading about 1,700. You would remember this. It wasn't that long ago. And it went to $800 on one of the feeds that we were watching. And I was frothing at the mouth to get it. I was opening my account to buy, and I was getting ready on the stream, and I was very, very excited about it. $800. I was like, oh my God, give it to me right now. And then it was fake. Kevin N says, that reminds me of Tom watching that collapse live. Yeah, exactly. It was exactly that. I was frothing, absolute froth. And then it was fake, and I got so upset. I thought, damn, I'm going to make some good money here. Did I swear? No. Maybe. Darren Jones, $10. Do you see a bullish flag on IWM 1 week? Let's take a look. IWM being the Russell 2000, the smaller cap companies, guys. If you're not aware of this one, you should usually watch this. Kind of been ignoring it recently because it's been relatively boring. So I don't see a flag so much. On the 1 week, IWM, you sure? Darren? Yeah, I mean, the way I see it is we're in the middle of the range. I mean, flags in general, I think you got to be careful trying to find flags because they're kind of hard to see correctly. And a lot of them will be, I just look at them as a coil. So effectively, the market is, think about more the story rather than the pattern. So let's say we have a really nice pattern. Let's say we've got this really nice market movement up, strong leg, kind of looks like tape two. Let's go over to tape two for a second. There we go. So we have a very strong pattern coming in, which is basically just huge amounts of bullishness. Then we coil. I don't care what it looks like. Then we coil for a while, and then we break a new high. What's this telling us about the market? Well, I would have to guess if you go check a lot of the smaller time indicators, they will have reset back to being oversold again during the coil. All the bears try to come in. They're like, damn it, I'm going to push it back. It's having a breather moment. It's run a sprint, then it's having a breather, then it's ready to run another sprint. But just kind of like a sprint runner, it runs the sprint the first time, good numbers. Then it gets a little tired. So the next time it runs on the sprint, it might only be able to do 90% of its previous move. And that's probably a good analogy here. So yes, that's the kind of thing I look for. The consolidation is important, but the way it angles, whether it's a flag, whether it's a pennant, whether it's any of those things, think about the pole length more than anything else. Does the ramp make sense to another ramp? And with IWM at this case, I don't feel like it. I feel like it's just kind of stuck in the middle of nowhere. There's so much noise in this middle zone. We obviously have resistance at 230, resistance at 233, huge channel. And if we break out, you know what? We'll talk about IWM for weeks and weeks and weeks. This would be very important. J Dibble says, that reminds me of the McDonald's Monopoly game I thought I won with my friends in first grade. Yeah, I've had a few like that. You matched them all up. You had the Monopolies and you thought you had the same colors and one was wrong. Or maybe you had three and you were meant to have four. A few people remember when I was skitzing about the other one. J Nibble says, you barely look phased. Well, it's because I've seen horrible things in the market. But in particular, that I was still frothing for that Ethereum. Yeah. The other one that I think if you went back and looked at the stream, probably the worst thing that happened was when DOT got crunched. Remember, everyone will probably remember that one. Oh, the DOT getting crunched. That was a bit painful that day. I was surprised because the liquidity just went out of the market so hard. Here it is. Remember that one? Oh, no. That was nasty. So you got to go back and you think about these stories and you think about what you've seen. Remember, always practice risk management, guys. Please, please, please. It's an educational stream. Obviously, I'm trying to help you find better TA the way I see the markets. But, you know, I really don't want people ideally to lose their life savings or lose their money. And I'm not trying to give you advice on what to do. I just want you to think about what the rich guys do. And they look at risk-adjusted returns. So they look at risk-adjusted returns. That's what they do. So why shouldn't everyone be doing that? I saw Kramer, by the way. Someone mentioned me this. Kramer supposedly attacked billionaires for being bears on the news. He's like, stop being bears. And that's kind of true because they're telling you one thing and doing another thing. That's what they're doing. So all the markets are coming back down. I will create a video now about what I believe is going to happen here. Yeah, I see it as the pullback that we pretty much required back to our 2050. Let's hope. That would be very sweet. Would I trade down? Probably not. Would I trade on the way up? Potentially. That's taking the short here. You can, but it's obviously much harder to short than long. So if you're a beginner in the markets, remember the markets are generally optimistic. If you're a bear, you've got to be quick and you've got to be fast and nimble and all these types of things. If you're a bull, you can be a lot more often wrong and still correct when you're buying quality. What do I think about 10-year bonds rising? Yeah, the yields. I think it's a deal. I think this is something that we should see the Nasdaq react to, and it's been resilient now for 2 days worth of buying, which is bizarre in itself. And now it's going through, so it's an extra catalyst to push that Nasdaq down. And you know what happened today? I think that the Nasdaq kind of pushed that percentage, which changed people's psychologies for, oh, I expect a little bit of a pullback, to it's not going to happen. This sucks. I've got to get in. Most people are calling it 2-3 days ago. They're all like, oh, I think there's a pullback coming here. It hasn't happened. I'm going to invest. Stuff this. I'm doing it. And they click the button. Did anyone do that today accidentally? Or did you feel that? I feel like they got you perfect on the psychology today. VIX long seems safer than shorting. Well, VIX has incredibly expensive costs on it. With roll, but maybe. Never really thought about it that way. Hey, Tom, have you used puts to short the stock market? Absolutely, bud. But I don't do it with just traditional bought puts. I use spreads instead. Spreads. Taking the short is all about timing. Absolutely, Redos. Absolutely. Vic says QQQ down 0.68 after hours. Yes. Thank you, Snap. Thank you very much. You've created the slight catalyst here that now becomes US 10-year, blah, 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 earnings, blah, blah, blah. 57. So Snap's actually come back up, but you'll notice the flow-on effect is, we're going to sell off anyway. Let's have a look at the stories. I want to read the stories. Let me check here. Let's go over the news. Okay. What have they come up with today? Have we got any ones that say things are going down? Billionaire Peter Thiel touts Bitcoin, says he is underinvested. Oh, no. Peter, what happened, bruh? Hedge fund scores, yeah, whatever. Intel, obviously. IBM weighs down the Dow. Man, IBM, what a horror that thing is. I forgot it was even doing returns. Anyone own IBM anymore? Now that's a business they're going to have a hard time ever getting out of the. It's like Intel in some ways, but it's more of even more boomer company. I don't think they've caught up yet. Stocks rise to record. Late earnings pressure tech. Yeah. Well, we'll have it by the time and the other things. Only Buffett owns IBM. I believe he sold most of that investment a few years ago. He admitted that one he got wrong. He sold either all of it or a huge amount of it. J Nibble says, at FX Evolution, I think the market was going to pull back anyway. You are correct, J Nibble. They just make excuses based on whatever is available. Yes. Now you're starting to see the truth. Absolutely, man. Look, there's always great catalysts. What do I say about any good crash? It's always in plain sight. If you go back and see Burry's call, it's in plain sight, the problem being subprimes. The COVID thing was even more ridiculously in plain sight. It's always there. Even the recent correction. When did we start talking about Evergrande? Here. When did everyone start whinging about Evergrande? Here. And then all of a sudden, all these other problems were there. Oh, the natural gas, the oil, everything's terrible. It's all bad. Let's kill the market. And they pull it back up. The COVID thing was absolutely plain-sighted. In fact, if you look at the market before the whole thing happened, it actually went down initially, then went up, made new all-time high, and then got crunched. So yes, it will generally be in plain sight. You will be well aware of it, but I almost guarantee 99% of us will not be able to recognize that's the one. Exactly, PK Sub, and took 2 months for the crash even after it was discovered. Yeah. New record high by Friday. I don't think so, Ryan. I don't think so. Dave says, I wonder if Burry was just early with his talk of massive rate increases and inflation. I see. I can't get behind that call. But he is early, in my opinion. But I'm going to go with 2026.6. There we go. That's my call. Personally, my opinion. Don't take that with any grain of salt, but that is my opinion. Snap is resurging with increasing volume, says Atticus. Yes, people will buy or try to buy that dip. The real story here is going to be now, can they use the 10-year going to 1.7 and Snap as a bit of a, all right, let's pull that puppy down for a little bit here. Christopher Weltmer says Tesla's 30% profit margin. Yes, expect that to decline slightly though. I think it will go like 30 into something around like 22, something like that. Finken79 says, on Evergrande, 4 more real estate companies are missed payments or are going under now. Yeah, look, this is it's a real deal. I don't know. I'm not privy to the conversation. I wish I was, but I'm not. That would be amazing if we were privy to that conversation. If we knew what they were doing. Oh, Snap just saw Snap. Yeah, Vic, that's right. Snap is belted in the aftermarket, but it was around 52 and a bit for a little bit there. Lehman took a while to play out. Yes, it always does. 2026.6. Yeah, that's my thought process. It is not in the best interest of any government in the world, especially one like China's government that has the most control, to allow this problem to become a massive issue, though. They will want to try to plug it. I'm sure it's horrible. I don't even doubt it. But to say that there's inflation coming off QE, it's not proven through Japan. I only look at Japan. I know it's different economies and people can argue all days about economics of it. But as far as I'm concerned, I don't see QE being inflationary. I see it generally being deflationary, which is bizarre, but it is what it is. So QE has tended not to really create inflation. And while Burry's calling it, he probably will be right eventually. So information to really finish up today's session. Of course, stock market pullbacks. Just remember, average per year is 4.6. Most years that aren't crazy bears, 2 to 3. That's all you can really expect. The other thing is we are still in fairly strong months historically, even after election, post-election years. These were usually weak months. We did see the weakness come in later. October, we're almost at the end of it now, if you can believe it. November, technically a very good month for the stock markets across the board through big history. So we will use stats to a degree to run with a concept. And at this stage, markets still look very, very strong. So we still have very strong movements here. We do have pullbacks. I would like to see pullbacks back into my red zone here would be ideal. And then we'll figure out what's going from there. If we can move over to gold just to finish up, I'm still not really trading gold or really thinking about gold, man. The main reason is I'm looking for December for gold for the seasonal or maybe back of November. And this to me is just a market that is kind of tough without being nimble and quick. It doesn't have a true participation kind of phase in it at the moment. And you'll pretty much see that when you go through the 2 hour and a few others, it's just kind of floating in the place. So what I'll do now is I'll go create a daily video for you guys. Obviously, I'll pop that out with my thoughts on everything. We'll talk about Snap. We'll talk about Facebook. We'll talk about, obviously, the US 100 and what we think is next in store for it. Please subscribe if you enjoy the stream. Thank you so much for the donations. And thank you for joining us as well for the close. This was an eventful earnings. You have to be tuned in next week, guys, because it's going to get crazy. Remember, imagine if we missed on Apple and we missed on Google and we missed on Amazon. With downgraded earnings. I don't think it's going to happen, but oh my God, that would be bad. Well done to everybody that did all right today in the markets. Congrats to you. I never hate on your profits. It's all good. And if you think I do, well, I don't necessarily maybe love everything that people trade. That's my personal opinion. And you can trade whatever the hell you want. If you like something, it's your money and your risk. I I'm a boomer from the investments perspective. I like the slow and steady, and my kind of crazy method might be Bitcoin or Ethereum or, some kind of crypto. That's what I call my crazy stock, even though it's a coin. And what I call, I just don't get involved sometimes in some of the madness. But there's been good money for people that have made, got involved in the madness this year. Obviously, AMC, a testament to that. So goodbye. Thank you so much. Practice risk management, and hopefully no one got burnt today. Good luck, everybody.